What's up, guys? This is the Broke Executive, and today we're doing the first in the series of portfolio and dividend reviews. This is going over all the dividends I received in August 2020, as well as what stocks I bought at the first of the month on September 1st in this case. So this is going to be a mini-series I'm going to be doing at the beginning of every month that will allow you guys a little more insight into what stocks I own, what stocks are paying dividends, as well as what stocks I'm buying as time progresses, so you'll be able to watch my account grow organically as well as through contributions of my own. So a quick overview of the portfolio. My monthly return was about $187 of capital gains. This is the price of stocks going up, which equates to about a 3.99% return for the month. As well as in terms of dividends, I earned $10.17 in the month, which is a yield over the entire portfolio of about 0.21%. Annualized out over 12 months, that's roughly 2.5%, which is a little low, but also August is not one of my highest paying dividend months. And then right there, you can see my 1-year graph that I traditionally would have behind me. Dividend income change year over year. You're looking at 2019 versus 2020. Again, I started dividend investing in September, so I didn't really have a whole lot of pay up until then, aside from a few months with just special dividends, or I happen to own stocks that paid the dividend and I happen to own them at the right time. So in 2019, I did not receive any dividends. In 2020, I received $10.17, which is why the change year over year is a divide by zero error. This graph, as we move forward and as we get into months where the previous years I was able to collect dividends, I'll be able to grow it over time, and I'll be able to show you guys how it is growing year over year. Then here is the chart for my monthly dividends gained. You can see the special dividend in May of $5.58. That's from owning shares of Fiat Chrysler. That was just a special dividend. I've since sold out of Chrysler, mostly because they do not have a reoccurring dividend. Then you can see in October I received 5 cents. That is the first month that I actually received a dividend payment, and from there it's continued to grow. Then if you notice the pattern, it's normally high, low, medium, back to high. This pattern repeats itself, as well as once you get over here to September, October, November, and December. That is the dividends that have currently been announced, not necessarily all the dividends I'm going to be receiving. So those values will in fact correct themselves to fit with the trend line, as well as you can see the growth happening, as well as it just kind of helps show me if my dividends are currently on track just based on what's being announced. So you can already see October is the low month, November is going to be up a little higher than December, should be the highest of those 3 months. Currently for September, they haven't announced all of their dividends. That one will go up. I expect it to be between $12 and $13 by the time all is said and done. Still waiting on companies to announce their dividends, especially the ETFs like Vanguard's VTI and VOO. They tend to announce their dividends later in the month and then pay them almost at the end. My September purchases, if you follow me on Instagram, you would have seen this screenshot that's on your right now. I did purchase 2 shares of Apple. Unfortunately, not at the best time. It did have a pretty big drop today, which is Thursday the 3rd. But we won't worry about that too much because I don't plan on trying to trade Apple to make a profit. I'm buying it in because I think the dividend is fantastic to be getting into, and I'll go into that in just a minute. So I bought 2 shares at an average cost of $131.13, bringing the total cost to $262.26. The current dividend yield of Apple is 0.62%, which comes out to be about $1.62 a share. And this is the post-split prices and everything. So I see the dividend of Apple being able to grow. It has shown consistent growth of about 10.5% over the past 5 years. They've had 8 years of dividend growth that is continuous. That means they've, at a minimum, paid the exact same amount, as well as you can see right here on their dividend growth sheet that they tend to pay a consistent amount for 4 months and then raise it to a new value. So currently we're only 2 months into the new dividend price, which this chart is adjusted for stock splits. You can see these little circles right here do in fact show any splits that have happened in the past, as well as you can see the continuous steady growth. This is something that I believe is going to be very consistent with Apple. If you look at how much cash they have on hand and how much they pay out, this is a very easily sustainable amount, and as a result, shareholders are able to heavily rely on Apple being able to pay out their dividend. This isn't something where the company is spending more money on dividends than what they're bringing in. This only makes up about 25% of how much profit they're receiving, so as a result, there is plenty more money that they can be paying out out to as dividends, as well as that's why I think it's going to grow over time. With the Apple dividend growing over time, I feel right now is a good time for me to be buying in, even with it dropping almost 10% 2 days after I bought it. That is because I personally look long term. I'm not seeing the stock drop 10% in one day. I'm seeing this stock go up 100% in 10 years. So as a result, I'm not too worried about those day-to-day changes, and it's not very concerning to me. I look at it as Apple has only been paying their dividend for about 8 years. They have plenty of cash on hand to be able to pay out their dividend for years to come. If you look at how much cash they have on hand at the moment, they could buy out many companies that exist. That is why I feel buying Apple right now is a good time to be buying Apple, and I will probably continue to buy into Apple over the next year or two just to build a position, because once the dividend starts climbing, once you start seeing dividend yields of 2-3%, as well as they have a history of growing their dividend for 10, 15, 20 years, many investors are going to be looking at that information and seeing Apple as a very consistent dividend stock. And because I focus on the dividend growth stocks, I'm trying to pick up Apple now while it's still cheaper compared to where I hope it will be in 10 years. And their dividend will consistently grow over these 10, 15, 20 years. And as a result, I feel buying it now with such a low dividend, it causes other investors to not necessarily look at it, because most dividend investors target yields of about 3 to 4%. Sometimes they'll range higher if they're willing to take the risk that the dividend is safe. But on the whole, a 0.6% yield is not something that many investors tend to be attracted to if they're looking for the dividend. But again, I see this as a growing dividend, and I'm trying to get ahead of it. So the cost for how much I'm getting is going to be very low, and my yield on cost will be very high as a result. Next, we're going to get into August dividends. It's not the most exciting things. I'm going to kind of power through it. I'll share little tidbits of information if I feel to see fit for companies, as well as just give you some insight as to what I own. So bear with me on this. So the first stock I owned that paid a dividend on August 3rd was Verizon. This is one of my more recent purchases, as well as I've purchased an additional share within the month of August that this dividend does not reflect. Verizon did just raise their dividend by about 2%, so I will be getting a little bit more in terms of how much per share I'm receiving as well. Then the next day on August 4th, AT&T paid out $2.08. This is another company I purchased more of recently. They have not recently announced a dividend increase. I expect them to be doing so after the start of the new calendar year, and that will continue to grow over time as well. Then on August 7th, I had two of my ETFs pay out. These are both bond ETFs. So the first one, LQD, paid out 30 cents, as well as BNDX paid out 14 cents. These are both monthly dividend payers, which is why the dividend is so low. They do pay every month, as well as BNDX does commonly pay a special dividend at the end of the year. Most recently, December 27th of 2019, they paid $1.35 per share, and that is on top of the monthly dividends that they pay out, which is roughly 5 cents per share. On August 15th, we had AbbVie pay $2.36. This is a stock I am very proud of owning, because they've been working really hard on developing vaccines for various illnesses that require users to wear a mask. Then there's one of the staple dividend stocks on the market, which is Realty Income. They paid $1.17. O does in fact pay monthly, so I received 12 dividend payments a year from them, which is why even as a staple dividend stock, you can still see it may sound lower as compared to what you'd commonly expect for such a highly spoken of stock, especially within the dividend world. On August 17th, we had Stag Industrial. This is another real estate REIT, just like Realty Income or O. They paid 60 cents per share. This is, again, another company that pays monthly, and this is a position I look forward to being able to grow in the future. It's actually one of my preferred stocks within the real estate market. Then my other real estate stock paid on August 27th, $1.22. This is the most recent real estate stock I've bought into, and I personally think it's one that's going to be very important in my portfolio. I'd like to build up a position in Welltower as well as Stag Industrial. So those are two companies I'm looking to buying into within the next month or 2 months. Finally, on the last day of the month, we had Sphd, paid 45 cents. If you haven't seen my last video, I do talk about this one. This is a ETF that focuses on dividends. It pays monthly, which is another reason why it's very important to my portfolio, and it's one of the stocks that really got me going in my quest for dividend income, and really helps to grow the portfolio over time because you get to see those monthly payments coming in, and as a result you feel much better about this dividend investing thing. Next week I was planning on talking about what my biggest loser is, what company have I lost the most money in, how much I've lost, why did I buy it, do I still trust it, just overall some various things that I want to be looking into and explaining to you guys, and proving that I'm not perfect. Not every stock I buy goes up immediately, as well as why sometimes trying to time the market isn't the best thing in the world. And that's how I got into the habit of just first of every month, put in the money I always say I will, buy the companies at that time, and then just let it sit. This is another kind of phenomenon that's happening right now with Apple, with their drop from post split. Knowing that I've sat through this in the past and I'm able to do so really helps me have faith within the companies I buy, that hopefully it can't be as bad as the worst buy I've done. So I'll be able to explain that to you guys in the next episode. Make sure you subscribe to see that next week. If you'd like to comment down in the description to take your guess at what company this is, feel free to. It may be one of the ones on that little graphic I have there. It may not be. Just take your guess. If you have watched some of my old videos, there's a chance you might actually know what stock this is. With that, that's about all I have in terms of dividends. However, moving forward, I did explain I'm looking into real estate as my next purchase. I'll be kind of watching and evaluating the companies that I own to try to make a better assessment of where companies are in terms of their price and how much trust I have in each company for how they're performing. So there is a potential I introduce a new company. I might be building on old companies. I might not even choose real estate. I'll have to watch the news, look at the markets, and make my best educated decision. And ultimately, the company I buy isn't going to be something I'm super scared about. So with that, that's about all I have in terms of content. I would like to remind you guys to subscribe for more. Let me know if the mic audio is better. I've been really focusing on that and trying to get it hammered down over the past week. Make sure you comment your opinions on my mic and how well I can record audio. Let me know what kind of dividend stocks you own, how much they paid you in the past month, as well as make sure you're subscribed so you can see my future videos. As well as I do have the Broke Executive Instagram page. That's where I posted the teaser screenshot last week, as well as I might do another teaser as to what stock I'll be talking about in my next video there. I have my personal Instagram, and then I also have the Broke Executive subreddit. You guys can feel free to go over there, do your show your portfolios. If you guys would like in the future, I would be more than happy to take a glance through some other people's portfolios, just kind of point out companies we have in common, maybe explain why certain companies others own, I don't. I feel like that kind of insight and just the open discussion would be great for this channel and being able to explain why I own certain companies, especially at my age. We also have referral links for Webull and Robinhood. The Robinhood, if you sign up, you can get 1 free stock. And then if you sign up for Webull, you can get 2 free stocks, 1 when you sign up and 1 when you fund your account up to $100. And they are currently saying that second stock you receive could be worth up to $1,650. Which last I checked is more than I've put into this account in a single month. And that would be hugely, hugely important to being able to jumpstart your own career. Don't forget to like, comment, subscribe again one last time. This is the Broke Executive. I'll see you guys next time.